So good to have you with us here on a Friday. I'm Marlon Bowling with you, and thanks for helping us finish out your week on the trading week here and opening up the month of September. Welcome to September. A lot of folks may not even realize we're that far into the year already. Hard to believe. We're in month number 9. Not that far from Christmas anymore, dare I say it. All right, let's take a look at our markets and bring in some expert help from Allendale Incorporated. This time around, we have none other than Mr. Steve Georgy on the line. He joins us right now. And Steve, always a treat to get to visit with you about what's going on in the markets. All right, big day for Allendale. You guys have the results that you have just released about the survey you guys just did. And I wanted to get your thoughts on what you thought of those numbers there.
Yeah, you know, I guess for corn, not a big surprise there, coming in 166.7 as far as the average yield that we had gotten from our survey. So producers out there giving us their numbers, that's the results that we've had there. That gives us a production number of about 13.9 billion. So still a pretty good number from where USDA currently sits at a 190 or 169.5, so a little bit of a reduction. But for beans, I think is the bigger surprise. The beans coming in at a 47.1. A lot of guesses out there are sitting around that 49 bushel to the acre. USDA sits at 49.4. Our number that we had gotten from producers is at 47.1. That leaves us a production number of 4.179. So the beans may be a surprise. Corn, I think, is more of a in the ballpark with everybody's numbers, but the beans certainly under where most people are currently.
So it's very interesting. Your numbers, your survey results come out at the very same time that we had a big reversal in the grain markets yesterday, where we had the corn and soybeans trolling around at new lows for the move, but then they turned around with double-digit gains. I want to take a quick peek here at our current grain trade and get your thoughts on the reaction here today. Now, on the corn market, last time we checked, everything was a little bit weaker. So far, we're still down 3 cents on December new crop corn at 3.54 3/4, about a penny and a half off our earlier low of the day. In the soybean trade right now, we have November now unchanged at 9.45 1/4, so it's kind of stabilized here from where we closed yesterday. On the wheat trade, on Chicago wheat, we have December now trading 2.5 higher at 4.37. If we look at Kansas City wheat, here we have December now at 4.38. That would be up 1 3/4 cents per bushel. And in Minneapolis wheat, that's the one that really got pounded on yesterday. It was down double digits. Today, much quieter. December now just a penny and a quarter lower at 6.39 1/4. By the way, the cotton market on December, I do want to throw that in there. December firming up again here. We're 51 points higher now at 71.44 cents per pound. Steve, I noticed on the information that Allendale released here this morning, you have some estimated frost-free dates, and I thought that was very intriguing here. When you go across the different states in the Corn Belt in the upper Midwest here, I don't see anything. If you look at the soybean frost-free dates, I don't see anything earlier than September 23rd, and we have a couple of possible bouts of cold weather before then.
You know, we do, and I think that's what the market's trying to put into it. We don't, as we've seen these markets pull back over the last several weeks, we don't have any weather premium put into these markets. I think that's what some of yesterday's rally was all about, is finally putting some weather premium back into here. But you're right. You know, we know that the crop is late, especially to the north. Around here, we're going to need every bit as long as we can in order to finish out this crop. And next week, as we heard earlier with the weather segment there, next week's going to be a little chilly, and we've got a couple rounds here of that. So there is some concern, and I think that concern is going to remain, and we're going to need to, if that gets down, if we see any frost down into any major production areas at all, this market's going to find some life very quickly.
All right, Steve, I'll bring you back. We'll talk about the opening in our livestock trade today on a Friday. Our guest, Steve Georgy, will be back right after this. Steve Georgy is with Allendale Incorporated in McHenry, Illinois, and he joins us right now to take a look at our livestock trade. And let's go ahead and take a look at our first trades here, Steve, on the board, see where we're currently trading. And let's start with live cattle. And on the big board in Chicago, we have things now firming up a little bit. We had showed October either side of unchanged in our last half hour. Now it's 8 cents higher at 105.48. December 45 higher at 109.55, and February up 80 cents now at 113.15 per hundredweight. That is the biggest gainer here on the live cattle side. And then if we roll over into the feeder cattle market so far today, we have the feeder showing September $1 higher at 143.58, and we have October now 98 cents higher at 144.28. Steve, you were talking earlier, Steve Georgy joins us here from Allendale, and you were talking earlier about this Goldman roll that a lot of folks keep an eye on. You say that that is something that's going to be taking place here very shortly, or is it already starting?
No, it is coming up here, and that's something where that'll be the next hurdle for the cattle market as well, especially in this October contract. And as Goldman, they move out of the nearby contracts and move into something deferred, it is something that will be watched. We know that the cash prices have been not so good. We need to see some life out of that. But the next hurdle will be this Goldman roll, and where do they move these contracts to? But that is coming up.
And typically that'll last for how many days, roughly?
About 5 days is what it takes for them to move that out. And so that's what the trade at least watches. Can they do it quicker? They can, but the tendency is about 5 days.
So does this happen after every expiration of a month on the trading floor, or what's the basis for that?
Yeah, it typically does, and it's something that it can move the market. A lot of times you'll see this happen near a close of the session, is where they will go ahead and they'll start adjusting positions. But they do it in such a big fashion that, it can tend to move the markets, and that's why people watch it. But right now, cash is still king. If we can get some kind of strength out of the cash market, we'll find the cattle react to that as well, but certainly something to watch is this Goldman roll.
Well, the lead month on the lean hogs would be October, so that I'm assuming is not an issue right now then.
No, and you know what? Hogs a little different story. When you look at hogs, you do have a seasonal low that tends to come in this time of year, and we start to see hogs rally from now into the next few weeks as we get closer to October, which is featured pork month. So you get this procurement, you get this buying early for hogs. You tend to get a low in for the October specifically, and we start to see some demand build for hogs. Usually there's a low that comes in here, and we get a pretty decent rally out of that October contract.
So back to the lean hog futures, we'll take a rundown here of how the trade is shaping up here early on a Friday. Right now, October is 22 higher at 61.62. It's had about a 70-cent trading range so far. December, though, back to unchanged at 58.02 per hundredweight, and the February now down 7 cents at 62.58. All the deferreds just slightly weaker here on the lean hog trade here so far today. And again, I'll point out the belly market yesterday afternoon, USDA said was down $1.30. So all the way down now at 126.28. Big time drop in the last month in that belly market. Steve, it's been a pleasure. Thanks for joining us once again.
Thank you so much.
And hope you have a great weekend, and look forward to talking to you next time.
You bet. Thank you very much.
Steve Georgy with Allendale. He's president of Allendale. Great guy to talk to.
Great guy. Great group we get to talk to.
Absolutely.
All right. Thank you. Markets editor, Marlon Bowling.